Alright, good morning. Let's go over today's trade plan. So the overnight session ended up being extremely balanced. That was the expectation heading into the FOMC announcement. We got a little bit of selling from the 73, 75s, but overall this market still remains stuck in balance. The major catalyst at this point is the FOMC announcement at 1 p.m. Central. So we could see a continuation of this theme where the market just continues to trade in a range. Typically, that's the type of price action we see heading into FOMC, where we'll just get narrow range balance followed by a directional move. So right now we have pre-market support 65 to 67 and pre-market resistance 71.75 to 73.75. The bias is neutral at the moment, and in the event that we get a break above pre-market resistance, that would tell us that there's strength on the buy side. If we get a break below the pre-market support, it would tell us that this market is at this point weak, and the short-term control at that point could shift from buyers to sellers in the event that we break below 65 to 67. Now, as far as the zones above and below the pre-market support resistance zones go, if we test those zones ahead of FOMC, we can expect rotation and a response at the zone. So if we test the 77.5 to 79.5 ahead of FOMC, we can get a response there because the expectation is for the market to overall remain in balance heading into the announcement. Same idea on the downside. If we break below 65, then we can still expect buyers at 60 to 62 as long as the test happens ahead of FOMC. Now, following FOMC announcement, we can get some volatility, momentum, and directional movement. So we don't want to be looking for fade setups at the initial support or initial resistance zone, on the FOMC announcement, because a high momentum move could take prices lower or higher than those zones, depending on just the type of reaction we're getting. Now, as far as whether we're going to get a directional push or not, we have balanced within a narrow range over the last session or so. So at this point, the market could put in a directional move, but that is something that we're going to have to watch in real time because sometimes with the Fed announcement, we'll get a big directional move and then we'll just balance, where it'll be a two-sided move. So it'll be volatile, but it's not a move that ends up sticking. In other times, the directional will actually have some follow-through, and it'll kind of carry the market in a single direction. So that's something that we will have to watch, in real time and see and gauge what type of reaction we're getting. How strong is the move? Is the momentum really there? Are the internals pointing to one direction versus the other, or the other markets tipping their hand as well and showing us that there's potential for a decent move in a single direction. So for example, if NQ is holding above 35.50, but then it starts pushing above the 35.70 to 73 area, that would tell us that there is some upside potential here. With TF, if we get a break above 22 to 24, the area that was rejected yesterday, that would tell us that there's some decent upside potential, and TF could be headed for a test of 11.30 to 32. So, in those scenarios, we don't want to be fading, the resistance zones above. But, if the other markets are showing still relative weakness, and, ES seems to be putting in a false breakout type move, or perhaps, it's just one big move up to 82.5 and then it starts balancing, then we can still consider those trades. So, early in the morning, I think you just have to be extra selective on your trades, because when you're stuck in a narrow range in a balance and pending an econ report, a lot of times, you're not going to get follow through on any of the moves, right? So, for example, right now you saw that, on the GDP announcement, we got a downside move, but there really hasn't been a lot of follow through. We got that downside move, and then the market just kind of rotated back up, and it's not really going anywhere, right? So we could see a continuation of this theme, which means that you either want to stay on the sidelines, or you want to get involved at such a good price that you can sit through that chop and that balance and still manage to have that upside potential and reward potential in your trade. But for now, I think there isn't really any major setup that we have to be involved in right off the open. I think the morning session could be very just muted range, continued balance, a lot of chop. So unless you're getting a really good entry, it's probably not going to be worthwhile to hop on board a continuation type trade. So those are really the main ideas this morning. And then for the afternoon, it's going to be really driven by the reaction to the FOMC announcement. It's going to be a news-driven move. So, that, of course, calls for caution as well. But, if it's a high momentum move and we can get on board at the right prices, then, there could be a decent trade in the afternoon. But I think in the morning session, unless we see a pickup in volume and volatility and, we start seeing a directional break, you just want to be more cautious rather than trying to maximize reward. Right now the environment is not really supporting that idea. It seems like, ahead of FOMC it's going to be a low reward, high risk environment, high probability of chop. So it's not really an environment that you want to be aggressive in. It's an environment where you want to be conservative. And again, if you can get really good trade location and time the trade, then it can still work out and give you 1.5 to 2 R potential on your trade if you're using a 2.5 point stop. But you just don't want to chase price action in this environment, which is very balanced. So those are the main thoughts. Let's see how well the buyers are able to hold the market above pre-market support this morning and where we're trading heading into FOMC in relation to the pre-market support and resistance zone, and we'll take it from there.